Good day everyone and welcome to our presentation. I am Amira Kasim and today we'll be delving into a comparative financial analysis of four key players in Malaysia's dynamic telecommunication industry, which are CELCOMDIGI, MAXIS Berhad, Telekom Malaysia and REDTONE. Our analysis spans the three crucial years from 2021 to 2023. Our objective today is simple yet critical. We aim to assess and interpret the financial health and performance of these companies using key financial ratios. We will benchmark their results against each other and establish industry standards to identify their competitive strengths, weaknesses, and significant performance trends. Ultimately, this insight is vital for understanding the competitive landscape and strategic direction within this cornerstone sector of Malaysia's economy. The Malaysian telecommunication industry is a vibrant and a rapidly evolving landscape. It has moved far beyond traditional voice and messaging services, shifting dramatically towards high-speed data fueled by widespread smartphone use and an insatiable demand for connectivity. Key trends shaping this environment include the aggressive rollout of 5G networks, the expansion of fiber infrastructure under national plans like Jendela, and a heightened focus on digital transformation with technologies like artificial intelligence, AI, and Internet of Things (IoT). In this highly competitive arena, the four companies we are analyzing each play a distinct and crucial role. First, CELCOMDIGI, a newly merged entity that now stands as Malaysia's largest converged telecommunications company. Serving over 20 million subscribers, it aims to leverage significant synergies and the nation's most extensive network infrastructure. Next, MAXIS, a long-standing leader renowned for its premium services and network reliability. It has consistently been at the forefront of technological innovation, being the first to launch 4G LTE services and now offering 5G. Then we have Telekom Malaysia or TM, the nation's fixed line and broadband powerhouse. As a key government-linked company, TM plays a pivotal role in national infrastructure development and the country's digital transformation agenda. And finally, REDTONE, an integrated telecommunication provider that specializes in niche data, services and digital solutions for corporate, government and SME clients. Now, to begin our deep dive into the numbers, I will hand it over to my colleague Kamalia Rosli, who will walk you through the first part of our financial analysis, starting with liquidity and leverage.
Okay, so thank you Nora Amira. I will now discuss liquidity and leverage, which are crucial for understanding a company's financial stability. Okay, first, let's look at liquidity, which assesses the ability to meet short-term obligations. Our analysis of the cover ratio reveals a very different strategies among the players. REDTONE consistently maintained a robust positions with a ratio exceeding 2.4 in all 3 years, comfortably above the industry median of 1.8 times. This indicates a very strong short-term solvency. In contrast, CELCOMDIGI and MAXIS operated with low cover ratios consistently below 1.0. While this can suggest tight cash management, it also points to potential challenges in meeting immediate liabilities compared to peers. Telecom strikes a balance, maintaining a stable and healthy ratio of around 1.1. Next, for the quick ratio, which is a more conservative measure because it excludes inventory. Again, REDTONE leads with an exceptional high ratio, showing a very strong immediate liquidity. This confirms that CELCOMDIGI and MAXIS have weaker short-term asset positions relative to their immediate obligations. Next, let's examine leverage, which measures how much a company relies on debt. The debt-to-equity ratio shows MAXIS with the highest and still increasing leverage, reaching over 170% in 2023. This points to a growing reliance on borrowed funds, which increase financial risk. Conversely, for the REDTONE is extremely conservative with a debt-to-equity ratio of less than 1% in 2023. It's also important to note CELCOMDIGI, which saw its ratio fall dramatically after the merger, suggesting a more balanced capital structure is now in place. Finally, 4 times interest earned, which shows a company's ability to cover its interest payments. REDTONE stands out with a very high coverage ratio, reflecting an excellent capacity to service its debt. In contrast, CELCOMDIGI's declining trend, down to 4.25, indicates increasing pressure from finance costs. Telecom, on the other hand, shows an improving ability to cover its interests, which is a positive sign of its earning quality. Now, I will pass you over to Nisha Sakira, who will discuss the company's operational efficiency and profitability.
Thank you, Kamala Rosie. I will now cover how efficiently this company use their asset and how well they converts revenues into profit. First, let's look at the average collections period, which reflects how long a company takes to collect payments from customers. Here, REDTONE shows significant improvements, cutting its collections time from 120 days down to 64 days over the 3 years. This indicates much more effective credit control. In contrast, Telecom experienced longer collections delay. Though it did improve in 2023, MAXIS collections period has been gradually enlarged, which could impact its cash flow. Regarding total asset turnover, which measures how efficiently assets generate sales, Telecoms consistently leads to the group. Its steady ratio indicates an efficient use of its large asset base to generate revenue. CELCOMDIGI's turnover saw a sharp drop in 2022, which was likely due to major distributions and the massive increase in its asset base, but it began to recover in 2023. Now for profitability, which is a key indicator of performance, the operating profit margin shows how well core operations generates profit. REDTONE was the standout performer here, reporting the highest margin, especially in 2022 at over 32%, driven by strong cost control. However, both MAXIS and CELCOMDIGI faced declining profitability over the period, suggesting they are feeling the pressure from operational costs or market competitions. Finally, let's look at return on asset (ROA), which measures the overall efficiency at generating profits from the entire asset base. Both REDTONE and Telecoms consistently outperform the industry medians of 1.5%. Telecoms in particular showed significant improvements, with its ROA more than doubling to 8.22% in 2023. REDTONE also maintains an exceptionally high ROA, reflecting strong asset utilizations. CELCOMDIGI's ROA drops sharply in 2022, directly tied to the measure before showing signs of recovery. Now, I will now hand over you to Muhammad Zulhemi for the market analysis, our overall conclusions and recommendations.
Thank you, Nisa. From a market perspective, ratios like the PE and dividends payout reflect investor sentiments and shareholder returns. For instance, CELCOMDIGI and MAXIS consistently show high price-to-earning ratio, suggesting strong investor confidence in their future growth prospects. Though this is significantly above the industry median of 7.9x, it's also noteworthy that both companies have very aggressive dividend policies, with a payout ratio often exceeding 100% of their earnings, which raises questions about long-term sustainability. In conclusion, our analysis paints a nuanced picture of the Malaysian telecommunication industries. Telekom Malaysia emerges as the most stable performer, showing balanced liquidity, declining debt, and significantly improved profitability. REDTONE, tough, smaller, exhibit exceptional financial resilience with outstanding liquidity and profitability, driven by efficient and minimal debt. For the MAXIS, MAXIS shows signs of weakening performance with rising leverage and declining profitability that signal potential operational inefficiencies. And CELCOMDIGI is navigating a period of post-merger volatility while short-term efficiency has been impacted. Its leverage is stabilizing and it is poised for long-term dominance. Based on our findings, we propose the following key recommendation for CELCOMDIGI. The focus must be on realizing post-merger synergies to improve asset utilization and profitability. We also advise moderating its aggressive dividends policy to retain more earnings for reinvestment. And for the MAXIS, it is crucial to strategically manage its high leverage to reduce financial risk. It also needs to improve its receivable management to address the lengthening collection period. TELECOM should maintain its disciplined financial strategy. It could further enhance performance by investing in high-growth areas like enterprise and AI services to reinforce its competitive position. And last but not least, finally, REDTONE should leverage its strong financial position and high margins to pursue strategic growth, perhaps through selective expansion or partnership, to build on its market footprint in a highly competitive market shaped by high capital demands for 5G and stagnant user revenue. Optimizing operational efficiency and managing debt will be paramount for all players to ensure sustained success. And finally, that's all from us. Thank you for watching. We hope this presentation has provided valuable insight into the Malaysian telecommunication industry.